All right, everybody, good morning. Let me know how the audio is. If you can, please. I finally updated a filter in my OBS streaming software that I think was keeping me too soft. If it's still too soft, let me know. If you can hear me okay as well, that would be nice to know. Hope everybody's doing well this Monday morning. Let's get right into it. Let's talk about some Bitcoin charts. Finally getting some more on-chain stuff. I know you guys enjoyed the chat with James Checkmatey last week. He's got great stuff on his site. Ideally, it would be good to get more of my charts up as well for y'all to enjoy when I'm not streaming. I'll get there eventually. I know it's not all the same charts, which is why it would be good for people to see it when I'm not streaming, but it takes time, is all I can tell you. So I want to look here at a few of the spent output profit ratios. Okay, this is a big one. I'm sure you guys have heard James talk about this a lot if you follow him. It's basically the ratio of price to realized price. Okay, it's very similar to MVRV. Just measuring the price at which coins last moved. And if you're above 1, in general, everybody's in profit. If you're below 1, then everybody's negative. But that's depends on the duration of those UTXOs. So again, looking with the Bitcoin researcher, research Bitcoin database, which is really good, and anybody can get on there and see those charts for free. You can sign up for an API for free. They do the long-term hodler and the short-term hodler at 5 months. James talked about that as well. So this is long-term. Okay, so this is long-term SOPR. So actually, to take off all the noise, let's go here. Even here. Keep this on linear scale for now, the actual price. Okay, so the green is the realized price, orange is price. All right, so long-term hodlers well in profit. Well in profit. All right, these are people that, on balance, over the whole life of Bitcoin, have held more than 5 months. All right, last time they were negative was here. So if you take the ratio of this, you'll get the SOPR. And this is for long-term hodlers. Good morning. Oh, sorry. Sorry again. Sorry. Good morning, Tim. False starts as usual. How do you guys hear me? Hear me okay? Good morning, Robert. Still some hiccups, but we should be getting much better with the audio now for streaming. Because with as I mentioned, my filters, just realized were messing up my OBS. Thank you, Tim. Okay, so I just explained SOPR without showing you. Show you again. This is long term. And most of these, I imagine, you can find on Checkmatey's website as well. I hope to get hope to get a better experience for y'all on my site as well, but it's just going to take some time because I have more economic stuff as well, money supply that's important to me, and I focus on, and it takes time. In any event, Labrit Renaud, thank you. Yeah, I think everybody should see it now. Let me know if you can't. Should be fine. All right, so when the coins last moved, we're going to look at long-term versus short-term hodlers, and the delineation is 5 months or 155 days. That's how the Bitcoin researcher does it, Bitcoin Lab. You guys can get that data for free as well on that website. All right, so well in profit for long-term hodlers on average. So the ratio of price to the realized price is the SOPR, and again, we're not just looking at MVRV or the total broad number, but the long term. So here's the ratio. And this obviously confirms, I think, what everybody knows, right? The peaks are less exciting. I'm cutting this off at 10x. So this got up to 35x. That is price to realized price. Quite a nice multiple. And this will give you your, your profit ratios, your spent output profit ratio. Now to kind of see where we are, I looked at, you remember with my PSR, which I'll show you in a second, the price to sales ratio. The price to sales ratio actually is a power curve itself. It grows, which is, again, unique, not like any stocks or gold or other things. And I got some good gold charts as well today to show you. But this doesn't really form it is a power curve, a slightly declining power curve, but it's not that strong of an R squared. So I just took the average to look at this. Oh, wow. And I'm even off the chart with the average. So the average, as you can see here, is even above 10 the whole time, and you can't see it, all right, which is fine. But what we can do is we can say percentiles from that average will still give us some nice little bands. So that's what we're going to put up here now. And again, it all confirms that we're never really going to be as good as we were. Everybody knew that. All right. The extreme price moves relative to our average cost is just not there anymore. Doesn't mean we can't get back to the 9, but it's quite a bit lower. So it's very similar to the PSR, which I'll show you in a second, but when this black line gets to the 10 or the 20, right, historically, that's been a buy. Right? It's $200 Bitcoin. Crypto winter. Same thing here. So I think it's good enough, this little analysis that I put together. I mean, don't really think about what these numbers mean in the tooltip here. All right, what you see, the 0.3, 0.02x, it's actually relative to the average, which itself always declines. But just look at them as a guide of levels. It's more what I'm getting at here. Even if we take off the realized price to not confuse with too many things, this is what it comes down to. Hello, Slimy. I do not. I have, actually, I don't know if the YouTube community is activated yet. I need to activate that. So thank you for saying that. It's really helpful, these sorts of metrics for bottoms. I know that's not where we are, but it's quite helpful. As for tops, I'm less skeptical unless there's an absolute blow off. Like, let's go back here first. This, you know, if you sort of saw this go up to the 6, and again, I don't really use this metric or haven't in the past, but if you saw this go up to the 6 and then start to come back down, okay, maybe with the midterm, like you could have let go of some coins and then bought back here during the crazy days of March 2020. And then when you see it just explode, of course, these are, you know, when you really see it explode, you're going to know that you're above average. But the Wall Street game is certainly here. And so I don't know. I mean, you know, how do you know here that it's not going to go to the 9? Right? I guess you could wait a couple weeks, and then if it hasn't gone, you can take chips off the table. But it could have gone to the 9, right? So it's much more difficult, as everybody knows, to call tops. I mean, it's hard. But I don't see this necessarily as a top caller unless it's absolutely blown off, right? Like stratospheric levels, huge mountains. You know, here's like just a big wall of worry. So let's look at the short term now. So this is, again, coins held over 155 days. Here's the SOPR with coins held under 55 days. It's a much tighter band. And this is, I think, what a lot of people use to trade, probably better to trade, but still. Most people know I'm not a trading channel, but let's just look at it. Same deal, you get above the 9. It's quite aggressive. See, in this case, this actually helps the short term. So the price is here. It's getting well above the green, the realized price here. I'll take the realized price off, just look at the multiple now. But I still would have a hard time, you know, still would. Like, okay, if it goes here and then it comes like maybe here, and you're thinking, oh, it's going back up, it's gonna go to the moon. Trading Bitcoin's hard. I think much easier to call the bottoms. Here's another interesting thing, right? This is where my PSR does better, which I'll show you in a second. But, you know, this first pump in 2021, meme stock trades were kicking off well above the 9. And if you were only looking at this according to this sort of these bands as I have, then you could have thought, all right, maybe time to lighten up. And then you could have been proud of yourself. And then, you know, price doubles. It's just very difficult. And with this SOPR, you don't see it like explode. So again, let's do a quick comparison with my PSR. One second. All right, so here's my PSR. I think this is much cleaner signals about what constitutes a top. So again, this is market cap relative to what miners make on a trailing 12-month basis. All right, so here, I mean, it's true this first top did get up. It didn't fall down as much. It's hard to call the tops. But you can see a much more pronounced peak, right? And then here, even though you have a big wall of worry, this is what I think we're in for, honestly. I really do. I think we're in for this coming into next year, even start of next year. Just we keep having these big peaks relative to the past, and then finally a blow-off peak, which exhausts. buyers. SOPR gives you a little bit of a different view. One that I like. Here's another reason I don't particularly see SOPR as. I mean, look, you could have. We're above the 9 here. We're above the average. And again, the average you can't even see. It's all, you can't actually in the short term. Here's the average. So this is relative to the average. That's how I'm making these bands. And all are below average because we've come down from huge numbers. But still, you can still make the ranges. Like, if you thought that this was a great time to sell, you'd be pretty disappointed over the next 2 years, right? So, you know, I could make this with the 90th to the 100th, and that might be more helpful. Obviously, you know, tops do get into the 9, but so does a lot of other stuff. Other stuff gets into the 9 as well. It's not as clean, in my view. I would say this doesn't look like it's going back to the 2 or the 1. I think what James talked about is probably going to come to pass, right? This looks like a dip. This blockchain stuff's always a day late, so it's yesterday. Here is on time. As of today, even, right? Oh no, I have this a day late too, actually, because it takes on-chain data. But so I like this one. I like the price to sales at the end of the day. Just, if you want to really get ahead of yourself, this will show when it truly is, you know, off the charts. And we don't have that yet. You guys feeling good about price above 100? Okay. Here's the oldie but goodie. Pulled this in this morning at 105, 106, 106K, which I presume is the price still. Hello, Kurt. Do you have any charts that can tell you what's going to happen over the next month? I'm not sure I have one. I mean, other than TA, like, you know, trying to draw wicks and whatever ABC Elliott wave stuff, which I'm not. I know people, that's good for some people, but I'm just not. I'm not into that. I'm more talking about relative risk of where we are, you know, in the cycle, because people get stressed. I'd say over the last couple days, I feel better that we're not going to have any breakdown to 80K based on these charts. Doesn't mean can't happen. Yeah, so this looks very, this is a great one. Let's look at it. Give me a second. I'll pull up the fun one too that shows us what the price would be if we get back to if we get back to trend at $4,000 an ounce. So, okay, so here we are. here we are now. I'll take the price off for a second. This is USD price, and this is now in gold ounces. All right. I'll take this off and this off. So I've shown this a lot recently. I really, it's hard for me to see gold bugs getting a better deal than this. Under 10 ounce price Bitcoin. And as of, I'm gonna have to pull it out now. This is my fun one where let me go here. Where's it frozen? Hold on, I gotta pull it out further. I don't know why that is not updating. All reasons my website isn't ready for production as far as all these charts. Give me a second. Give me a second. All right, let's just look at this one first. Just ounces. So this one is certainly cheap. It could always be cheaper. Do I not have the 10th? I have it. Under 26 ounces. Right on the 20th percentile. Statistically extremely cheap. And I think what's interesting is it worries a lot of people. Yeah, I agree with you. Definitely does. But it worries a lot of people, I think, even in Bitcoin, that gold was like asleep for 10 years and now it's forming a new trend. But what I've tried to discuss last week, and we can talk about it again if you guys want, I don't think that's the case. I think it's possible gold screams for, still for another year, but I just don't, it's grown 40% year on year over the last 2 years. It's just as good as Bitcoin. All right, hold on. Let me get this into the dollar, which is the fun one to look at. Why is this not updating? Because it should be. I don't know why it wasn't. All right, hold on. Let's go back to this one, the fun one. So here we say, okay, let's go back into the dollar trend in the future and say we get to that expected trend, which in gold ounces is 65 ounces. All right, again, we are less than 26 ounces of gold per 1 BTC at the moment. And so if we just assume we get back to the trend and then translate that into dollars, we're already at insane levels, 250. All right, now I'm looking at the power regression. This is $4,000 gold at those levels. All right, so assuming Bitcoin gets back to where it was over the last 10 years relative to gold. Peter Schiff's never going to believe it, but I think it's totally possible. This already takes us to the huge numbers because the dollar trend line is only 125K. But if we get to that historical gold ratio, all of a sudden we're up closer to the 9 in dollars. So that's my most bullish chart for Bitcoin, actually. Is that we return to basically this price for Bitcoin that is moving out from the lows that it is now, but moving up here to, the 250. That represents getting back to this black line in terms of gold ounces at $4,000 an ounce gold. I think it's totally possible. Here's another fun one. Sats per dollar. This is like the nightmare of any US official. But if you just look at this, it's unbelievable. It's just the inverse of the price chart divided by 100 million, right? To get into sats per dollar territory. It's like it's kind of funny too. It's like a mental gymnastics. It's like you want these little craters to happen, which are all-time highs. You want these, and these look like they're gonna happen again and again and again. It's like think about falling under 100K. Looking at this chart, it's like yeah, this will go back up to I don't know, maybe 12, 50, 1500 sats per dollar, maybe somewhere up here. But the trend is 800. It's wild. It's wild to think about. And it's kind of like the gold ounce chart, actually, right? So if you think about, if we're on the dollar chart, people are like, well, the price can go back to 20K. Okay, maybe, but here's the puking, right? This is the worst time in December 2022. 6,000 sats per dollar. Do you think we're going back to 6,000 sats per dollar? Just looking at how this trend line goes, 96% R squared, of course, same as the dollar chart. It's crazy. You're only getting 800 sats per dollar now. This should say Satoshis, but it says it here. $1 million Bitcoin is somewhere here. 85 sats per dollar. Sorry. So yeah, I need to have a think about some more of these on-chain metrics, which admittedly, James is, I think, one of the best in the world. It's really exciting to speak with him about a lot of this, but even this one, like I think you could trade this one sideways. Like, okay, so if you're down here and you see it start to move up, right? Theoretically a low, you could trade that sideways to here. But again, how you know that this isn't going to go way up to one of those explosive is the scary part. But I guess if you just have a plan to trade some short-term percentage, here to here and whatever around these bands. Like I'll show you what I mean. Let's take off here. Okay, we've clearly been in a range like this. but it seems hard. I mean, if you know, $15,000 Bitcoin here, you get up to the 9, it's 23,000, and it falls. But even though the SOPR fell, it only fell to 21K price. Then it jumps back up 28,000. Like, you just need to hold through this. So I don't know. You guys let me know if you like these. I think it's harder to really look at these metrics and say that they're I think they're clearly indicative of overall bottoms, like if you get to the worst, and then indicative of overall tops if you get to the best. But even there, like we talked about, you know, it would stink if you unloaded a lot here at 68K. Yeah, maybe it would have worked out. It would hold back down to 54 or something, but it's difficult. This is a wall of worry. But you tell me, what are other indicators you'd like to see? Also, if we go back to my PSR, here's PSR. Let me again take out the noise. Let's look between the 10th and the 90th. All right, so again, in my opinion, and I'm not saying I do this like perfectly, but you know, when you get at either end of this band, it's like screaming by or pretty clear. You might want to lighten up. Screaming by. Screaming by. This was a hard little dip. But we haven't even got over the 9. Yeah, I agree with you. And James said that as well. You know, it's the hardest market he's thought as well to read, looking at the on-chain stuff. And plus, we have all the Wall Street instruments and FOMO and FUD and front running. I mean, that's what Wall Street does, right? They front run. I'll show you guys. You know, I remember when Bitcoin was younger, but it was also losing a lot of its dominance, you know, to ETH or to stable coins. It was still viewed as the gold, the digital gold, but like, you know, if you were going to trade crypto, it was really going into ETH or stable coins or going back into Bitcoin. Now you can go into Wall Street, right? Like you can go back into, for example, here, tech. This is the top 8 tech stocks in market cap. So this is also a major shift, right? Strong trend for tech. 24.3% CAGR since Bitcoin's been around. And over the last 2 years, since GPT, 41.1% CAGR. But imagine, and this will end, where it ends, how it bounces back, whatever. I think a lot of this capital could go back into Bitcoin now, right? It used to be just only Bitcoin going into ETH or stable coins or whatever. Now it's, Bitcoin is completely in the game with Wall Street. Yeah. Great website. I definitely, I think we should talk to them more, like once a month. We'll try to do. Geek out on some numbers. Maybe I'll even make a ratio of this market cap to Bitcoin. I don't know. That I think it's going to change. I think we're going to see more correlation now to people like risk on in Wall Street, and then I hope risk off means back to Bitcoin. I don't know that for sure, but Bitcoin did crash as well during Liberation Day. It's true. But it was already coming off the high more than, well, it's fairly correlated actually. I guess I got to do that chart tomorrow, don't I? It's the top US tech companies versus Bitcoin market cap. And it's the same with gold, right? Gold is institutionalized for sure. It's on a much faster trend than its all-time trend, just like AI. So I think we're going to see some, rotational phenomena that we haven't seen before with Bitcoin, I think. Let me pull up. Second. This is obviously another gasoline to the fire. Fed's balance sheet. It's not going down anymore. I've already said from December, asset purchases will resume. This is the current trend. But even this isn't the best corollary with Bitcoin still, right? Remember, Bitcoin price did peak here as QE3 was concluding, but it also peaked here when the Fed hadn't printed for 3 years. And it did peak here when silly season was concluding. but it's also going up now when it's been going down. So that's another thing I keep thinking about is the sort of rotational aspect of Bitcoin. Okay, let me show you the gold charts. I told you guys I would have some gold, good gold ones. All right, so let me pull them up. Pull them up. Remember how I always say that Bitcoin is still a flea compared to the traditional mining markets, right? Like, yeah, we might not get, here we go. We might not get long-term SOPRs like this anymore, which are gonna like be way over trend. We may not get that. But let me show you this. All right, so here's a variation of the chart I've shown before, Bitcoin versus gold. All right, Bitcoin price. And if you take a revenue for Bitcoin, which we can get on a daily frequency, right? Over 30 days, it's here. Peaks were like $1 billion, $2 billion, and we're not even at the prior 30-day peak, which happened after the ETF boom. Trailing 12-month, we're barely at to the peak of 2021. What's the number? $17 billion. All right, $17 billion is what miners make on a trailing 12-month basis. Now let's just leave, let's take 30-day off. Let's just look at now this compared to gold. You ready? This is gonna be jaw-dropping. This is what the gold market does on a trailing 12-month revenue basis for mining revenue. $17 billion for Bitcoin miners, $400 billion for gold miners. Gold is shining. A lot of jokers coming back into the gold market right now. Unprofitable projects now becoming profitable. I can come back to this. Yeah, I've seen him talk about this, but I actually haven't watched his latest analysis in depth. I have similar figures as him, but I don't necessarily. I can't fully speak about him. His latest talk about liquidity falling, but I can show you a few things that I don't necessarily agree with. But I also don't think that liquidity has to peak for Bitcoin to go up, like we talked about before with the, the Fed's balance sheet can be flat and Bitcoin's price can go up. It can go down and Bitcoin's price can go up. I'll talk about it in a second. But this again, you talk about established industries, industries that people understand. Gold is shining again. It was always more, right? $100 billion industry, $200 billion industry. Now it's getting to a $400 billion industry. That's massive. That's like, pick your poison. I mean, that's like, that's a main, there's like careers all over the world that are made in, I don't know, the garment industry or something. This is a huge number. The oil, what I want to get oil on here, by the way, that's over $1 trillion. And that's one of the biggest industries in the world. So 400 billion is massive. And that's what gold is doing right now. Now, Let's look at 30 days. Okay, it's different. Let's take this off now. By the way, 30 days is still more than Bitcoin over a year. So let's look at Bitcoin 30 days and gold 30 days. Still, you see the discrepancy. All right, but this is more going to reflect the price action because I can't get gold down to less than a monthly frequency, so I can't do with. I have other charts with Bitcoin at daily mining, but not for gold. So again, gold is shining because of the price. We're getting to $40 billion a month, $38 billion a month. That's going to be huge. It's going to continue. It takes a long time for gold producers to scale up. They expect these prices. They'll probably get them for a while, but at some point, the cure for high prices will be high prices. There's going to be too many miners, not enough people buying, and the price will fall. It's supply and demand. It will happen. Bitcoin, as we know, doesn't have that problem because Bitcoin has the same supply coming out every 10 minutes. And it doesn't matter the demand. The supply remains the same because of the difficulty adjustment. But now I want to show you the PSR in gold. So remember I did the PSR for Bitcoin. Okay, so here, let's find it. Here's the price to sales ratio. All right, again, what is this? It's the market cap of Bitcoin divided by the trailing 12-month miner revenue. What's the trailing 12-month miner revenue? If I could find it again. Let's take it next to this chart so I don't forget it. Trailing 12-month miner revenue for Bitcoin is this figure. Okay. So the market cap divided by this figure will give you the PSR. PSR is, in my opinion, very good. I don't know why a lot of people don't use this metric, or it's not that hard to figure out, but like I said, you can see clear bottoms and clear tops here. Okay, so now let's do this with gold. And let me show you how wild gold has been. So interestingly, Bitcoin as well is following a power curve here. Okay, so PSR is actually increasing. Most industries don't do that, but Bitcoin does it. So here's now the gold PSR. That is the gold capitalization of all the gold in the world, including industrial, because that's part of mining, divided by the mining output, which is, as we know, getting to $400 billion a year. Here's gold. Okay, so here's the price. Price is on the right. The ratio is not as extreme as the price. But because of this high price, we're getting to levels that we haven't seen in a long time. I'm not calling for a gold top. I mean, it can go on for, like I said, another year, 2 years. I got no problem with gold. Look at the difference between the 90th and the 100. All right, so the old 1980 peak, 150 times mining earnings over the year. We're not close to that, but we are at historical highs. So again, never financial advice, but with this chart, with this sort of an asset, I might be figuring out how to rebalance. Not financial advice. Also not perfect. Notice here, same thing with the SOPR on Bitcoin. This is not a great top caller, actually. If you sold here, you'd be disappointed. but we are certainly at elevated levels. And a blow off top, we know what that looks like. It's here. We only really had one blow off top in gold. That was the 1980 $850 an ounce for 2 seconds. This is only 653 on month end, January 1980. But I'll be looking at this quite closely now compared to Bitcoin as both of these mining industries progress. This is the counterpoint when people say, oh, we're not early enough in Bitcoin. This is the counterpoint. Gold is a $371 billion mining industry. Bitcoin is a $17.2 billion mining industry. You know, and both asset classes kind of fit, in my opinion. That's why I'm curious now to see what I can do with, say, a gold to Bitcoin ratio, and then a tech to Bitcoin ratio. There's a lot of Bitcoiners that got out in the last year and are rotating into AI or whatever, which is fine. All power to you if you want to diversify your holdings. Are we done with the cycles? Anybody have any thoughts? Thank you, Satoto, for the repost. I know a lot of people think they're done, but I could easily see this blow off. I could easily see this blow off over the 9, like it's done every prior cycle. Might not happen by the end of the year, or it might. You know, you can't look at this chart and think that markets are always just going to be rational and calm and you're not going to have FOMO and booms and busts. We have them in gold, we have them in stocks, AI. And I can very clearly recall, even like during this period, when a lot of Bitcoiners were saying, I think it's just going to be a calm rise, even here. It was a great bit of advice that James said about think about what you would do if those big moves happen, right? And in many ways, that's kind of what I'm trying to do here as well, right? Like if I would say it's very hard to play the middle. You know, I had a leveraged long position from down here in Bitcoin, and I held it all the way to somewhere here, and I'm glad I got out before this dip. But once you get to like here, you get pretty nervous, especially if you got interest riding on it, right? And leverage. And it wasn't even that profitable, by the way, because interest was piling up. It was profitable, but so if like you're trying to do leverage or whatever fancy gimmicks, you know, in this stage, and now I'm looking at the ratio, not the price necessarily, but the ratio. I think it's very difficult. Much easier to start down here and just, you know, at some point enjoy the gains. But I could tell you, even with starting down here, I got nervous here. Because everyone right here was saying, oh, the SBR, Strategic Bitcoin Reserves, taking off. It's going to be announced. Cynthia Loomis is going to say this, this, and this. And it didn't happen, right? I mean, they made the announcements, but it was sort of like cold fish type announcements. It wasn't nothing concrete. So that's my thoughts on that stuff. I think you have to really be careful with these sort of short-term moves. Much easier to call the bottoms for sure than if you got the right metric, the tops. And I'm not seeing, you know, maybe you know, I could redo these levels, but yeah, okay. Short term low. Is it a short term bottom? Very difficult to tell. Maybe it gets lower. Maybe the 40th percentile is our base here. Maybe we fall to 0.8x instead of the 0.94x that we're at right now. I need to watch. I know a couple of the reports that you're talking about. I'm not fully versed on it, but my assumption is much more liquidity coming than less, and I'll show you why. I'll show you why right here. So Bitcoin is base money, monetary base, and I need to get mine updated. Third quarter's going to be coming in the next week and a half. Here's two trends. Why is this changing? As usual. One second. Sorry for the dead time. It's coming. What's going on here? Too many charts, guys. It's all looking good. Ah, it's that one. Okay, one sec. All right. This is my global liquidity. It's not the same as what Michael Howe has. He's more on like the broadest. But there are two different trends here. This is monetary base. This is basically the size of central bank balance sheets. Okay. Again, why isn't this updating beyond May? Why did it stop there? Sorry. Okay, there are some updates through, you really only can be sure about through June. But I'm taking this all the way to October, even though this number you can be sure about right here. And then some values are updated, some are changing because of the currency. That does update. I suspect this to be a little bit higher, actually, once I finish the update. It's just something I do once a quarter. It's too much otherwise. But so here's the 1969 trend, and I'm actually only starting this in 2000, even though it is the 1969 trend. Why did I just reset that anyway? Didn't need to. Okay, so we're well under trend. All right. And the 2008 trend is even flatter. But based on the signals from the large central banks, you know, I don't see more hawkish behavior from them. I see more dovish coming. So the point is, just to answer your question, at least how I'm looking at this, Kurt, is everybody knows that there was a huge risk of monetary inflation or price inflation because of the real monetary inflation that came here during the P word, the silly season. We came off that pretty hard. You know, Powell wanted that to be his legacy from his 2022 Jackson Hole speech, said we're done. And then you get that Fed balance sheet that I showed you. If I'm not gonna be able to find it again, here we go. Right? It's been a long slog. There's the Silicon Valley Bank crisis. But that's turning around. They've already said that it's ending. So you know, if I put the percentile bands up, you would be in like the second percentile here. And I can show. I mean, it's historically low. So I have to just look at what Michael Howe did. I don't have, you know, fresh eyes on what he is reporting. But as far as central bank money goes, which is the most economically comparable money supply to Bitcoin, it includes physical cash, vault cash, and bank reserves. I, I have a hard time seeing this go any lower. And in fact, signals are that it's going to go up. But I would also remind that my view on Bitcoin is this is 5%, max 10% of the story compared to what Bitcoin does. Because of this chart, where you can see how small Bitcoin still is relative to all this stuff. Right? It's less than 10% of the value here. Right? We're at 25 trillion, 26. Again, we got weak currencies. The reason this goes down right here is just weak currency exchange rates against the dollar. But here's Bitcoin against base money, which is that central bank money, right? That figure. You see, look at that. The trend is 34 trillion. It's at 25.6, right? And I got to update it. It's not, it's going to be a little bit higher than that, I think, after this quarter update, which is still only taking us through September, but that's what it has. That's what you do when you deal with slow central bank reporting. If you zoom out and look at the trend, you know, back to our long-term discussion, is no question we're going to catch it very easily. Gold, we're going to catch. Now, gold, it's true. Gold is so far over trend. You could imagine if my mouse stays higher here, might not catch it in 2033, but maybe 2037, 38. But gold is not going, in principle, gold is not going off of this trend. I'm nearly convinced of this. Same thing as treasuries. Right, we'll pass treasuries in 2041. Treasuries grow slower, 7.5% CAGR, than money. Yeah, I wonder what their, you know, I'm thinking of Sminston's copper gold ratio relative to Bitcoin, or the ISM, maybe, some of those metrics. Those kind of bore me. Not the copper. The copper gold is cool. What Sminston did. I need to get that. I need to chart that up. Let me show you, just to be clear, because that seems to be turning around, but also not like exploding anytime soon. Like it's just going to be a slow. This is from a couple weeks ago, but I enjoy this one very much. I never would have thought to do this ratio. So this is the BTC price in log. Here's price in regular. And here is, where's the copper gold? Here's the copper gold right here. So copper right now is, because gold is so on fire, copper is so cheap relative to gold. But it's interesting, whenever that turns around, and I don't know if, I don't know if this is the bottom. I honestly don't know if it's the bottom. Could go more. But whenever copper turns around relative to gold, Bitcoin goes up. I would have never thought about this. And it's a great one to keep a look at. But anyway, the point is, so he's timing the peaks here, right? They're very close. 30 days off, 12 days, 60 days. It's cool. But what is not 60 days, what could be like 2 years, is the climb back up. So if this model holds, and I'm not sure that it will for the next blow off, but you know that, and if say copper is bottoming relative to gold, and then copper turns around, it's still not like going to be next week that this chart would signal a blow off top. This chart signals at least another year or two before we have any chance of blow up. But I have no idea if that's going to repeat. But it's a very interesting chart. I need to chart this one up. So I would say like risk on. Oh, sorry, your message was covering his chart, but I was describing these points right here. So if it's true that that copper's going to rebound versus gold, and it might. I mean, it can't get any lower. So if copper's going to turn around and get better relative to gold, if this trend of topping together holds, which I never would have thought of, again, I never would have thought of this. It's very cool. Then we still have like a year or two for the copper price to rise relative to gold, which I presume in that case is risk on. Right? Like the general economy is rolling, so your copper is rising relative to gold. That's risk on. We're actually in a risk off situation still because gold's rising relative to copper. So this is a cool chart. And yeah, I need to think about that one. So that's what I'm looking at today, guys. This thing could go for a while. Looks crazy though. Just the price itself on linear looks crazy. But relative to miner revenue, we're as hot as we've been in 20 years. For gold. For Bitcoin, and also look at the difference here. Like this is making, new millionaires in the gold market, whoever's playing this, because so many old projects are going to come back online. So many jokers are going to come into the gold market. Before 2023, the gold market never peaked above $200 billion a year in mining revenue. Now it's nearly double. So as much as Peter Schiff would like this to go up forever, it will not. Supply will outstrip demand, and then the price will fall. This still remains one of my favorite top callers, other than the ratio itself, which is, oh, I can't find it. Too many charts. This one, just the good old power trend, right? So right on trend, little low. And then, yeah, the SOPRs, I would say the same thing I've always been saying. It's much easier to call the bottoms or relative tops with these types of models. I think harder to trade. I think I'm going to leave it there today, guys. Let me know if any questions. Think about Bitcoin priced in sats per dollar. Wouldn't want to mess with this trend. Need less and less sats for every dollar as time goes on. Did want to show this very quickly. For anybody who tunes in from America or thinks that Europe is warmongering, every week they joke about invading our countries or actually talk about invading as they're doing here. They think you're stupid in America. And most of them are Nazi sympathizers. Just want to keep reminding people of this. It's crazy times, and I think it's going to reflect in the price. It's going to reflect with what Ukrainians are having to do in Europe. So, as they say on the Bitcoin Libertarians, stay humble, stack sats. Thank you guys for watching. Let's try to stay strong with good values for freedom. Take care.